Good morning, children. In the previous class, we have seen what is a bank reconciliation statement and why is it prepared. And there we have learned that whenever we try to match the balance of cash book and passbook on a particular point of time, there is always a chance that the balances on a particular date may not be same, and that generally happens because of various causes which are responsible for the difference between the balances of two books. Now today we are going to see these causes which comes under this topic, reasons or differences between balances as per cash book and bank passbook. Children, last class I have tried to explain you with few postings in the specimen of a passbook. I hope you keep in mind the bank column of cash book and passbook when we go through these points. So the first reason or the cause for the difference is called checks issued, or you can say drawn but not yet presented for payment. I repeat, checks issued, drawn, but not yet presented for payment. So let me explain you what this point means. So whenever the checks are issued for payment by the businesses, they are recorded in the credit side, that is payment side of cash book immediately, the moment it is issued. But the bank will record the entry of those checks only when the checks are presented by those parties for payment. Thus, there is a possibility that there may be a gap of few days between the entry done in the cash book and in the passbook by the bank. If bank reconciliation statement is prepared on a date falling between the two dates, that is issue of check recorded in the cash book and checks presented to the bank for payment, then there has to be the difference between both the books. Children, to make this point clear, I will take you to the same specimen of cash book and passbook of Messrs. Tall and Short, which we have discussed the previous class. If you see here, then on January 2, in the cash book credit side, January 2, there is a posting by Furniture Dealers Limited, 6,000. This is the payment made by this business Tall and Short to Furniture Dealers Limited. So it is recorded on the credit side of cash book 6,000. Now I told you last class that the credit side of cash book is equal to withdrawal column, which is debit of passbook. So this has been recorded here 6,000, and if you see here, to Furniture Dealers Limited on January 4. The transaction is same, the only difference is date. Here it was January 2 and here in passbook it is January 4. The reason is the business has paid it on January 2, so they immediately recorded here on the credit side, because remember, business can do the entry only in cash book bank column, whereas in the bank it was presented for payment by Furniture Dealer Limited on January 4th. So the amount is withdrawn from the account of Messrs. Tall and Short on January 4th. Therefore, the balance reduces to 34,000. So what I'm trying to say is, this check with an amount of 6,000 appears both in cash book and both in as well as passbook. But now I'm going to show you a check which is actually appearing in the cash book. If you can see here on January 17, there is a check issued to K Nagpal and Company with 7,300 amount. You see that, children? January 17, K Nagpal and Company, amount is 7,300. But this is not appearing in the withdrawal column till January 31st. There is no amount with 7,300 with the name K Nagpal and Company in particular column. This is what is called check issued by the business, not yet presented for payment by the party, and this will cause a major difference in the balance as per cash book and passbook. So what you have to understand is, after this, the cash book will have less balance, cash book less balance, as compared to passbook, which will have more balance, since the check was not presented for payment in passbook. So passbook balance remains the same, whereas cash book balance has decreased. This language, cash book less balance, passbook more balance, will help us to do the questions related to bank reconciliation statement. Now, I hope this first cause is clear to you. We are moving with second cause, or the reason, which says checks deposited into the bank but not yet cleared or credited. Checks deposited into the bank but not yet cleared, credited. It means to say that whenever checks are deposited into bank, they are first received by the business and recorded in the debit side of bank column of double column cash book, which is the receipt side. But the bank will give the credit in the deposit column of the account holder only when it has been received the payment from the other bank, which is known as clearance of check. There is a possibility of a gap of few days between the deposit of checks and credit given by the bank. Therefore, difference will arise on a particular date in the bank balance as per cash book and the bank statement. To make this point clear, we will again go to the format of passbook and cash book of Messrs. Tall and Short. So here, let us see in the cash book, whenever the check is deposited, then it is recorded on the debit side of cash book. So you can see on January 8, children, January 8 to J. Johnson and Company 3,500. This is a check which this business Tall and Short has received from J. Johnson and Company, and they have deposited in the bank, and therefore it is entered on the debit side of our cash book in the receipt column, that is bank, in the receipt side, that is bank column 3,500. And according to our explanation last class, debit of cash book is equal to deposit in the passbook, which is a credit column. So you can find the same amount 3,500 here on January 10 by J. Johnson and Company's check 3,500. So since these two amount appears for J. Johnson and Company both in cash book as well as the passbook, so the passbook cash book should remain with the same amount. But now I show you a check of date January 22 to M. Mohan and Company 10,500. This is one check which this business has received from M. Mohan and Company on January 22, and they have deposited in bank 10,500 is the amount. This should also appear, like in the previous case, in the deposit column of our passbook. But if you see here, there is no amount 10,500 till January 31st. It's not that it will not come, it may come in the next month, February, but till January 31st, this is not appearing in the deposit column. So this is check deposited for 10,500, recorded in the cash book in the debit side, but not appearing in the passbook, our second cause of difference. So I hope this second cause, check deposited into bank but not yet cleared or credited, is understood. So what will be the impact on these two books? Since the check is recorded in the cash book will have more balance, while it is not appearing in the passbook, so passbook will have less balance by that amount 10,500. Cash book will be more by 10,500, whereas passbook will be less by 10,500. This is our second cause of difference between balance as per cash book and passbook, which may come in our questions. Now we are moving with the third cause of difference, which says interest credited by the bank but not recorded in cash book. See, if the bank allows interest to the account holder, that is the business, it credits the account holder's account and his bank balance increases in the books of the bank, that is passbook. But the account holder or business will record the transaction in the cash book only when it is known to him. Till that time, the balance as per passbook will always be more than the balance as per cash book. So this third cause, we will again go and see in that specimen if there is any transaction which can make it clear with an example. Now children, you have to understand that in previous two cases, when the checks are issued and checks are deposited, the entry is made first by the business in their cash book. Whereas when the interest is credited by bank, the bank has the right to do the entry only in passbook. So in passbook, let us find out any transaction which has interest. Yes, I can see it here. The last transaction is by interest collected on government securities, 2000. This is not the interest given by bank, but it is collected on government securities. That means my investment made in government securities. So both the interests have the same impact, whether it is an interest given by bank or it is interest collected on government securities. The passbook deposit column will increase by this amount 2000. So this should have a simultaneous posting also in the cash book on the debit side. So let's find out this amount 2000, but there is no amount 2000 appearing till January 31st when this cash book is closed. So we can say interest is collected by bank on government securities, 2000 appearing in the passbook but not appearing in the cash book. So by this point, the balance of passbook will be more by 2000, whereas balance of cash book will be less by 2000. So you can see here, cash book less balance, passbook is more balance. I hope this is understood. Now we are moving opposite to it, and the point number 4 or the cause number 4 or the reason number 4 says bank charges or interest on bank overdraft charged by the bank not recorded in the cash book. So many times bank will charge an amount for the service it gives to its customer. For example, every bank gives us an ATM card to operate in our account. So bank charges an amount for ATM card service. So there are different charges which bank deducts. So the bank will not come and ask you for that charge. They will directly, debit your withdrawal column of passbook. So bank charges charged by the bank for the service rendered to its customers. That is the businessman who operates a current account. Now bank debits the amount holder's account in its books. When I say debit, it means withdrawal column, the amount is written. But the account holder, that is the businessman, will record it in cash book and write it on the credit side of double column cash book only when he comes to know about it. Till that time, the balance as per bank statement or passbook will be less, whereas the balance as per cash book will be more. So let us go into that example again to understand this point of bank charges or any interest charged by the bank. So since this is bank charges, it has to come in passbook first. So in passbook, let us see the transaction on January 31st, second last transaction, to bank charges. So this is charges charged by bank which will go in the withdrawal column as rupees 100, and it is on the date January 31st. This has to have a simultaneous entry on the credit side of our cash book, on the credit side of cash book, but we do not find this 100 bank charges till January 31st. That means it has not reduced your cash book balance, whereas it has reduced your passbook balance. So that is why any interest charged by bank on overdraft or bank charges will always reduce your bank balance, but it will have no effect on cash book. That means cash book will have more balance. So let's see our point and how it affects our cash book and passbook. Cash book, cash book is more balance. The balance is more because the amount has not been recorded in the cash book on the payment side, whereas in passbook the balance will reduce or it is less balance since it was recorded in the withdrawal column of passbook. So hope these 4 points are clear to you. Now fifth kar leं. Now we move with the fifth point or the cause which may be the reason of difference, which says interest on investments and dividends collected by the bank. So children, I think I already discussed this in point number 3 earlier, where interest received credited. I discussed you with you. So this has the same impact. Point number 5 is also about the same point, where interest on investments or any dividend collected by bank for my share investment or investment in shares or securities will directly come in my bank account in the deposit column, which will increase our passbook balance. Whenever interest on investments are collected or dividends on my share investment or securities is collected, passbook balance will increase, whereas the simultaneous entry is missing in the cash book, so cash book will have less balance. So these are the 5 points we have discussed till now. So children, our next point number 6 for the causes of difference between passbook and cash book balance is direct payments made by the bank on behalf of account holder. So let me explain you this. Let us take an example of insurance premium. Businesses generally secure their assets and the properties by taking insurance policies. So they have to pay regularly, either half yearly basis or quarterly basis or yearly basis, an amount as insurance premium. So the dates are fixed. So what can happen is the businessman can give a standing instruction to the bank people that on so and so date from my account so and so amount should be transferred to the account of insurance companies as premium paid by my business. So in that case, since the standing instruction has been given to the insurance company, the bank automatically on the date will transfer the amount from the businessman's account to the respective insurance company's account. This is what is meant by direct payments made by the bank on behalf of the account holder. In this case, what is going to happen is the account holder may record it in the books of account only after receiving the bank statement or passbook. Now till that time, balance as per passbook will be lower than the balance as per cash book. We can see this example also from our example of Mrs. Tall and Short. I remember there was an amount of insurance premium shown there. So children, if you can see here on January 31st, it says to premium paid as per standing instruction 2500. So this is what I'm talking about. The business tall and short must have given planning instruction to the bank for payment of this amount on a particular date. So bank has paid this amount on behalf of the business, which will reduce the balance of bank in my passbook. Whereas if this amount 2500 is not appearing on the credit side, that is payment side of cash book, this is going to keep the cash book balance more than passbook balance. So here there is no amount 2500 in regard to insurance premium. So this is the example of that cause, direct payments made by bank on behalf of the business, due to which the cash book has more balance while passbook has less balance. Now we move with cause number 7, which says amount directly deposited by the customer into the bank account of the businessman. I repeat, direct deposits into bank by the customer, which means the amount has been directly deposited by the customer into the current account of businessman. Now, if payment is received by the bank directly, it will record it in the account holder's account in the deposit column, which will increase the balance of passbook. So passbook will have more balance. Now the account holder will record it at a later date or sometime afterward when he receives the bank statement or passbook. Till that time, passbook will show more balance, whereas cash book will have less balance. And this is what point number 7 means. Now let's move. Now let's move with the next cause or the reasons, which says dishonor of bill discounted with the bank. So whenever bills are discounted with the bank, then the amount is directly deposited in the bank account of the businessman, which increases the balance of passbook. But due to the dishonor of such bills, there will be a reverse entry and the passbook balance will decrease, less balance. And if that same amount has not been recorded in the cash book will have more balance. This is what it means, dishonor of a bill discounted with the bank. Children, just like dishonor of bill discounted with bank, whenever you have check dishonored by bank, that will also have the same impact. Cash book will have more balance, whereas passbook will have less balance. Whether it is dishonor of bill or dishonor of check, the, the impact will be the same. And now we move to the next reason, which says bills collected by the bank on behalf of the customer. It's now easy for us to understand this after doing 8 causes, that whenever bills are collected by the bank, the money comes in the bank account of the businessman or the account holder, which is deposited in the deposit column of passbook, which is credit column, and that will increase the balance of passbook. So passbook will have more balance, whereas cash book, till the time the amount is not recorded in cash book, will have less balance. This is what is the impact of this cause, bills collected by bank on behalf of the customer. So all these causes are very important. You have to note down all these exactly the way it has been shown in the video, with the effect cash book less balance, passbook more balance. Under this heading, reasons or differences or causes between the balances as per cash book and bank passbook. Now, having understood and discussed these causes, we can move easily with preparation of bank reconciliation statement in the next class. So you have to make a note of this, so that in next class you will be able to follow how we are going to do the accounting for preparing bank reconciliation statement. So this is all about today's class. Thank you, and stay safe and keep studying bank reconciliation statement.